Good afternoon, everyone, and welcome to today's Dun & Bradstreet India webinar. The topic of today's webinar is COVID-19 Risk Management Challenges for Finance Leaders in H2 2020. Today's session will be moderated by Dr. Arun Singh, who is the Chief Economist at Dun & Bradstreet India. I would also like to take this opportunity to introduce to you our two esteemed panelists for today's webinar, Mr. Krishnan Venkatachari, the CFO of Signity Technologies, and Mr. Pankaj Malik, the CFO of Fullerton, India. Before we begin the session, I would like to tell you all about certain things that we will follow during the webinar. Participants will not have access to talk during the entire length of the webinar. At the end of the presentation, we will have a Q&A session. You can ask your questions using the Q&A tab on your screen. So I request you all to kindly note down any questions that you may have and ask the same during the Q&A session. Please note that you have to write your full name, the name of your organization, and the person you're directing your question to before asking the question. I will now hand over the control to Dr. Arun Singh.
Thank you, Kaustubh, and welcome everyone. My sincere apology to everyone that we are starting 10 minutes late because of course, one can understand the technical glitches. And before moving on to the my discussion, which basically I just want to talk on the subject, I would like to say thanks to our two distinct speaker today, and I'm looking forward to listen to them. And today's topic, we are going to talk about after COVID-19. What are the risk management challenges we are going to face, especially from the finance side during the H2 2020 and going forward. Now, before I basically start the session, I would share my screen. Yeah. Uh, so today, before we go to distinct, our today's speaker for the subject, I would like to talk about a certain basic data element where we feel some trouble, some of the challenges we are going to face during H2 2020 and 2021. And as a company, we have to basically live with that. And there are basic questions everyone is asking about what's going on and what are the key global businesses risk we are facing, and how to prepare your organization and to survive and the thrive during this COVID-19 and going forward. So moving on, I was talking about the four critical questions everyone asking at this point of time is the basically what is the depth of the disruption, what is the length of the disruption, and how the shape of economic recovery will look like. And once economic recover, what could be the new normal that basically we have to live in? Historically, if you go back 1 century back when we had the, I mean to say the Spanish flu till most recent, economic crisis, that's 2008 financial crisis. Each and every financial crisis have changed course of the action. We have changed the business normal, changed the people life, have changed everything basically, and that people have adopted that new set of innovation and how that innovation is looking like, how that new normal will look like. That's precisely we are going to discuss today. Now, if you see what has happened, the extent of the problem, basically what we're talking about, the length and the breadth and the depth of the economic crisis is basically 1980, 1929, the Great Depression. It was Dow Jones Industrial Average collapsed by something around 90%. 1987 crisis, Dow Jones collapsed by 36%, whereas global financial crisis 2008, Dow Jones collapsed by 54%. Today, till April, your Dow Jones collapsed by something around 40%. Look at the speed at which from a top we went to the bottom. It was 6 months during 1929 and 17 months during 2008. but during COVID-19, just less than 2 months. Recovery, we don't know how long this is going to take because still event is unfolding, is not over. Historically, it took 22 years to 2 years to recover, through various economic crises which we have seen as a result of the pandemic, as a result of various other economic shocks. Today, we have already written off, global GDP by 9 trillion US dollar for this year and the next year. 9 trillion US dollar from a global map, which basically equivalent to 3 times size of the India economy. The Indian economy is something around 2.7, so one can understand more than 3 times of the Indian economy is completely going to be wiped out from the global map in next this year and year after. Now, how the shape of recovery will look like historically in during all the economic crisis and the pandemic, researchers suggest that in fact the most of the economic research suggests that there could be a 4 different shape of recovery. One is a U curve, which we are expecting. One is basically the plausible, that's plausible, the V shape, L shape, and then W shape. The recovery could take any of the shape, but from a DNB side, we are expecting that the recovery will be anywhere between V shape to the U shape, which means we recovered during the January 2020, but the problem was that COVID-19 changed the business course. Now we need to think about how the new normal look like and how we need to basically take action to recover much faster, in fact, ahead of the other organization, other sector. We do a global business impact score, wherein basically we, it's like it's indicate the level of uncertainty what the businesses of experiencing during any of the cross-border trade or any other economic uncertainty they face. Unfortunately, that's all-time high. That's closer to the 325, 327. Basically, that's the score, and that's all-time high. That's which means higher the score is a higher the uncertainty level in the economy. That's a global. Historically, what we have seen that during the crisis period, the bankruptcy rate surge. This is the US data, and the bankruptcy basically the two things. In India, unfortunately, we got the bankruptcy terms after the IBC code implemented recently. That's still not popularized concept, but in the US, that's a very old concept. That's what we have used the US data to talk about that, and basically that says that during the recession period, bankruptcy is basically 3 to 4 times higher than the normal period, which means we need to act fast and we need to act now to ensure that how we protect our balance sheet to move forward. There are basically 10 broad challenges which we are expecting all of us as a company need to live with that. I will not talk about much that 10 challenges. I'll just basically briefly touch base in the sense. One is a fiscal emergency and credit worthiness of the sovereign, basically the country, because most of the fiscal stimulus measures going and then going forward, most of the country will face that challenge. US-China relations is already under problem since long, and that will change the how we approach public health cooperation worldwide and most of other cooperation at the world level. That will create a basically geopolitical risk in the continent. Then we also have the protective trade policies going on for long. Now this will get massive push, and we need to think about that. Then we have some of the economies, in fact, the leading economy is going to struggle and take time to come to the normal during Q3. We also have some of the basically the I just talk about the deteriorating fiscal position of the government, and that's going to create a challenge for the social and the public support to the economy. Federal reserves, they have lost the control of overnight borrowing rates. That's going to create a problem, because as we all know that the moment you sneeze, the world gets cold. That's a problem, and that's happening, and that's true today. And I think then we need to take that seriously. After COVID-19, the biggest challenge is going to be the availability of the labor. In India especially, the migrant labor went back. Then the availability labor, the unemployment rate in some of the sectors going to create a major problem. The eighth problem is basically that the debt stock in some of the countries going to go up and will create a problem. Then we have some of the recovery in the automotive sector, especially in the Europe's industrial sector. Then there could be threat to the cyber attacks, but given the most of the technical platform which we are going. These are the 10 broad challenges which we have to basically live in, and we have to basically design our strategy to overcome these are problem. Basically, there are three things we can do from a broad level perspective: maintain the viability, increase the need to ensure that your business remain viable, and basically you cut a cost ahead of the basically your revenue. In fact, the cutting of cost should go much faster than the normally you do during this point, trying to be basically build the resilience towards your business, and try to increase the vitality of the business. So what we have done, there are basically 2 by 2 metrics. One, you need to assess your strategic position, whether that's strong or weak. You need to look at your financial strength, whether that's a strong or weak. And there's a 4 outcome. If you're strong in both the scenarios, the financial strength as well as the strategic position, which means you need to, this is the right time to invest in the product leadership and grab the merger and acquisition opportunity available. If you're strong in the financial strength but not strong in the strategic position, then basically you need to create a core competitiveness, secure funding to strengthen the core areas. If you're strong in the what you call the strategic position but weak in the financial, this is the time to take a strategic cost cutting and then focus on the core areas. And you're weak in both areas, strategic position as well as the financial strength. Now this is the time to spin off the certain business unit, sell stake in the company. Basically, the idea is to, there are many matrices, there are many outcome of various metrics we consider. We need to find out which block we are and accordingly take a call. Because historically what we have seen, the company are basically who clean their balance sheet, they cut cost ahead of the curve, they focus on the core areas, they've delivered two things. So what we have done, we have basically taken group of company one side and group of company other side. Group of company who basically taken that three initiatives, they clean their balance sheet, they cut the cost ahead of the curve, they focus on the core area, were able to deliver EBITDA 25 percentage point higher than the company who did not do that three things. And the company who did the three things, they were able to deliver cumulative total returns to shareholder between 2007 to 2017, 150 percentage point higher than the company who did not do that one. The idea of the discussion, and I'm looking forward to listen to two prominent speaker at this point of time today, to what perspective they have, and basically what company during this the challenges need to do to navigate the COVID-19 crisis. With that, I will close my remark, and I would like to ask Mr. Krishnan Venkatachari to share his perspective. Over to you, Mr. Krishnan.
Yeah, thank you, Mr. Arun. I think good afternoon to all the participants and also the organizing DNB team. I'm Krishnan Venkatachari. I think often spoken word very clearly in most of the challenging time is that risk management, and especially it relates, they always talk about it, it relates to CFO. In my opinion, I think the risk management has to be uniform throughout, across at any business life cycle or any life cycle, and it applies to everyone and more so monitored by the finance leaders. Let's move to the next slide. Just a brief on Signity. Basically, while I introduce myself as a CFO with about 30 years of experience, I think we are on the software testing side. We are in the IT side, which is especially more so. We are the world's second largest independent testing service company, basically. We operate uniquely and we have our capabilities built. We are a quality assurance and quality engineering company, and we have about 300 plus active customers and 2,300 employees globally. And it's a listed company operating out of India, and predominantly 50 plus Fortune 500 customers, and the rest is all metric basically. So we have seen an interesting journey, which I will share as we start progressing on the slides. The next slide, please. Let's move to the next slide. Okay. It was well summarized by the moderators that the current scenario of global pandemic, as to summarize in 3 points, is that global pandemic has re-returned the human destiny worldwide. 100% sure, and there is no a negation on this. But I'm trying to look at what is there for India has been delivered clearly, is that the dependency on the Western market is quite high for us. Our impact on India is distinct on many counts. While I have not spelled out the counts, but I think I'm for sure that most of you will agree, the kind of what you call medical infrastructure, which is yet to catch up in India. And also there has been a transformation in economy over the last 2 years, which has been trying to do or try and tested methods in terms of trying to get through into various areas. So which means that the impact for India and the uniqueness of the population, which is very huge, and the availability of the resources for the set of population being quite high, I think these are the inherent challenges which will have long-standing impact on India, in my opinion. And so what it leads to, basically, the recovery time is going to be challenging, and then it's going to be slightly many account in terms of the challenges which we need to address collectively. On to the next, yeah. So while the challenges are manifold, I think the important point today, I think all of us will agree, is that the supply chain is broken. The supply chain is completely broken down with lockdown and with nil production, and then limping back to production today. And the second portion, which is very, very important, is that availability. I think the Indian economy definitely depends on the migrant workers and labor force. I think with migrant workers migrating out very clearly, even though the lockdown gets lifted partially and in some places fully, I think getting production and services will have its downstream effect in terms of having a cascading effect for about a quarter plus more, basically, so that it's going to hit the economy badly. What it results basically is that on account of the transportation and restrictions and movement, I think the raw material, which is very key for any of the productions, and probably I would say that today the new norm of working from home can benefit the few of the sectors. But I think predominantly raw material by way of material or by way of human manpower is going to really hit the industries. And what it leads as a vicious circle, basically, there will be inadequate working capital flow. So the result is that the result of this is going to be having a paranoid effect in various sectors for a prolonged period of time. And we need to live with and understand and say that this prolonged period of time, how do we really bring it down, and how do we minimize it, and how do we survive? So probably a year which we see basically predominantly from the CFO's perspective is that you float around for the year. I think you have done a great job in terms of sustaining the downturn. Just a quote from what PwC did a survey. Over half of CFOs expect that it will take for their company at least 3 months to recover once the virus recedes. But I think the point which needs to be noted very clearly is that once the virus recedes. So what is the percentage of receding which we are looking at when we assume that it is going to be 80%, 90%, or some kind of some inventions come through? So ideally, is the quote unquote, there's a big question mark in terms of when the virus will recede, because this will have a cascading effect in some form or other in the months to come. While planning for the business recovery, there are 3 priorities which has to be kept in mind, which is 1, undoubtedly safety of the stakeholders, 1, operation stability. And operation stability is very important, basically, to keep the organization running. And then customer focus for cash generation. There is no point in just picking up a customer, basically, some amount of business is coming through, but I think cash is king today, and it's very important that we need to plan systematically in terms of generating cash. The risk mitigation strategy in brief, I'm just going to keep it at a very low level so that we can open up the forums in terms of what Signity is doing. I will cover and then move on to the next speaker. So the risk mitigation strategy is that review the SLA of existing customers from the IT perspective. That is what we do, and perform the risk assessment and control testing, which is very, very essential. Basically, an organization has to take it up in terms of assessing their risk and how do we put control measures on that. Certain risks are not under our control, and certain risks, so assign a probability and see that how best the risk can be controlled. And you will have to be responsive to your business, responsive to your customer in terms of adopting the change or providing the right kind of services in terms of these kind of pocketed services to really cater to the needs and prepare to deal with both short-term and long-term financial changes. While people have talked about thinking about the short-term cash flow impact, I think this will have a long-term cascading effect. So we need to really plan out in terms of, okay, 12 months ahead, 18 months ahead, which is very, very essential and critical. Review alternate business strategy, especially with focus to manage people. Especially, I've talked about it in terms of any industry. I think people becomes a raw material today, even though there is enough set of raw material is needed and machines are available. I think, and especially an industry like IT and IT services, I think people are very essential. So you need to look at deploying them and trying to work through and win the customer to see that what best business strategy can work. And embrace digital technology, which includes working from home, and which is essential, and the transformation, which has almost happened, but I think by force, probably we should now make it as a new norm to move on so that the costs can be optimized. And keep an eye on government stimulus to leverage the scheme. I think we have done that successfully globally. Our operations span over US, UK, and various areas. I think it's essential for every company to keep an eye and raise the antenna in terms of what is logical and legal and eligible in terms of the government stimulus to see that how do we leverage the same. Overall, I think I would suggest that we need to restructure the business and build a resilience model, which I would say that when I move on to comment, I will comment very clearly as to what we have done systematically. In short, the risk mitigation of the business can be grouped into 4 categories, according to me. One is that accept, reduce, transfer, and eliminate. Accept is that the tolerant to accept the right business, and which is self-explanatory. And reduce is cost optimization. I always use the word cost optimization as against reduction, but I think in the kind of pandemic today, we need to definitely get into reduction as well. Transfer, insurance coverage on appropriate business area, be it a receivable insurance, be it business liability insurance. I think we should have adequate business insurance to protection to cover with, basically. Just for an example is that when this pandemic was about setting in China, we have jumped in as an organization to cover the company from apart from the other risk, receivable insurance, especially in the US, Canada, and UK market, so that we are covered adequately and we don't really fall into the trap, because we expect 6 months down the line there could be a bad debts flowing through. So we anticipated and we have done this. So these are essential elements which need to one need to act on. Eliminate, I think if you look at the 2x2 metrics which my predecessor showed, I think that signifies the symbol very clearly. That eliminate is that we need to definitely eliminate which is not viable in terms of a customer account or in terms of a business or whatever it is, to see that we remain profitable and we don't drain cash flow on such businesses. And what is very important, we have done it practically. And what is really equally important that which organization has to do is that build a leadership team in terms of handling these specific areas. One, to focus on a business continuity. One, looking at cost reduction and cost optimization, and which predominantly the cost reduction and cost optimization comes in the laps of the CFO. There is a risk management, including insurance planning, where at this kind of a pandemic, how do we react out to the various risks which is possible and expected, and the future risk associated on account of the chain of events, and business response and liquidity planning, which is very, very essential, because today, if I respond in time, probably I think it serves a lot of purpose, basically, and then I'll be able to move ahead and do my liquidity planning in such a way that it's very, very critical to have my liquidity planning and monitor it on a systematic basis. And we need to have work from home and people management, HR diverting their energies out very clearly, engage the people, and the deliverables are worked out systematically. And what is very important is that the IT, while we talk about the IT recovery, I think the cyber security is very, very important. We have seen that our peers in many of the cases have gone into legal trouble or lost business on account of the cyber security issues, which all of you might be aware of. Then look at alternate business strategy. I think now this has become very clear as a transformation journey for every company in terms of trying to look through is that how do we get into a shift left mode in terms of seeing that what is the next gen offerings in terms of how do we adapt to the situation to start looking at and moving up in terms of the alternate business strategy. And you talk about alternate business strategy, the classic examples could be basically when government went ahead and banned Swiggy or whatever delivery points, they moved away from food delivery to a essential delivery, from essential to a medical supply delivery. So I think that's a kind of a transformation which people have started looking at to keep afloat. One precaution in terms of cost reduction measure, which I would like to highlight for the members, is that the cost reduction or optimization should not impact business continuity. Sometimes we need to let go the cost basically for keeping the long-term business in mind. And also it shall be, at these times of pandemic, I think we need to analyze the areas as critical and non-critical, and application should be done in terms of non-critical areas so that your business continuity is not impacted. And investments, while we are optimizing the cost, I think the investments also need to necessarily move up in the new and emerging technology, which will help us in transformation journey. And customer retention and sustenance shall be the key. And the most important is that I think on a constant basis, both internal and external communication, especially for a listed company, I think it's very, very essential that we need to have a communication constantly with both your internal stakeholders, external stakeholders, and customers put together. What we have now done with Cignity, probably I'll cover it up in a few slides. One, please. Yeah, responding to crisis at Cignity. I think when I summarized all those points over there, we have effectively done a review of the SLA of all the customers which are most affected, downsized or partial billing. We have invested in those customers very clearly where we feel that there is a long-term strategic nature is going to be there, saying that we will keep it as a zero billing basically, so that they have been trained in this technology and they will be able to help you out to do some amount of R&D transformation, and which could be our way of gesture in terms of being with you, especially in the airline industry and hospitality industry. And we see a very positive vibe coming through that basically, because there is a responsiveness in terms of the business coming through where we have seen the kind of investments which we have made. We have done, as I explained earlier, we have done an adequate insurance coverage in these times, especially with respect to the cyber threat and especially on the receivables we have done. We have taken stock of a complete list of our vendors in terms of the committed cost, and wherever possible we have put a pause, and wherever possible we have negotiated the terms in terms of the receivable payable days. While we have adjusted for the receivable days, we have also done the same for the payable days. And what is happening on the internal stakeholders? I think we have started monitoring the bench. On a primary step, what we have done very clearly is that we estimated what could be the impact in terms of going on a very conservative approach, and we have worked on a zero-based budgeting. We completely eliminated all the cost and did a fresh budgeting for the year, and we moved ahead in terms of cost optimization and cost reduction at all levels, right from compensation optimization. And while few areas have got a natural optimization in terms of travel and hospitality expenditure freeze, whereas other areas we have gone ahead in terms of monitoring it systematically. Let's move on. We have focused, and I think this could be a penultimate slide where we are focusing on key industries or new emerging technologies based on the research. I'm sure the team will be sharing it. We feel that few of the areas like banking and securities will have a negative impact, and few areas like communication, education, and healthcare will have a positive impact. So we've started focusing on all these areas, both on short term and long term. And what we are trying to do basically is that we are forging into partnership with few of the offerings in terms of digital and newer emerging technologies such as zero touch, artificial intelligence, virtualization, security and user experience testing. So while few have been built internally, but I think we have moved ahead and tried to force the partnership out, and we are in the final stages to get there, so that we can make an organization which is more resilient. And let me step back and take a bit. Basically, that 2012 we did a transformation, 2017 we did a transformation that is making us stay afloat. And these times of pandemic, we're having only a limited impact on us in terms of the few sectors. But I think our technological offerings, we are trying to modify and move up the value chain as a shift left concept, which will make us stay afloat. And these are the few steps. Please get to the next slide. I conclude my speech. I just wanted to borrow the words of Benjamin Franklin, is that by failing to prepare, you're preparing to fail. I think we as an organization has been resilient, and the leadership team has been responsible in terms of this transformation and preparedness as to how do we really move forward and make it more effective. While I can proudly say that our work from home has delivered at about 99% efficiency with the kind of infrastructure what we have invested over a period of time, and this will continue to be so. And with these few words, I thank everyone for the patient listening, and the session moves to the next speaker. Thank you.
Yeah, so thank you, Mr. Krishnan Venkatachari, for that insightful thought and my insightful conversation. And now I would like to invite Mr. Pankaj Malik, CFO Fullerton India, to share his opening remarks on the subject. Over to you, Mr. Malik.
Yeah, thank you, Arun. Thank you, Venkat. Now, I'm the Pankaj Malik. I'm the CFO of Fullerton India. Fullerton India is a non-banking finance company with around 14,000 employees, and we have around 24,000 crore the asset size today. Now, I must say on this subject that these are the unprecedented times, right? And the last couple of months have been very tough and kind of evolving each day. And one thing is sure, that the COVID-19 pandemic has brought all the companies or the institution back to the drawing board. And the things what has helped the companies to succeed and save in the prior crisis may not work now, and people need to find out and see what are the new levers they need to identify for the success in the future. And with that, I want to talk about the quote by Sam on the screen. And the gist is that the greater the crisis, which is today, and the greater is going to be the opportunity. And I have no doubt that we will recover from this crisis. However, during the process of sailing through this crisis, some of the companies who may be successful today may not be able to survive in the future. This is sure, I don't have a doubt. And also at the same time, the companies who are thinking outside the norm and taking their thought leadership ahead and thinking about and trying to find out the opportunities which this crisis provide are surely going to come out very stronger, and they may take a couple of notches above where they are today in the corporate competitive world. Now, if we move to the second slide, I've used in this slide an iceberg model to explain the current crisis. Can you move to the next slide? Yes. As we all know, generally, for any crisis, and that's evident in the iceberg model also, that only limited information is visible. Like in the iceberg, only 20% can be seen with your eyes, however 80% is under the sea. And the same is applicable for any crisis. You able to see only limited information. With little bit of struggle, you will able to see what real reality is, what are the undercurrent, and you need to go much deeper if you want to exploit that crisis as an opportunity. Now, let me go back to the three layers first. What do we see today? We see that there's a global fear mongering. People are really worried, and for the right reason, because we don't know where we are going to be in next couple of months' time. There are uncertainty all over the place. Businesses are suffering, and we don't know again what's going to happen. Revenue loss is happening. Assets are going down. Business are severely impacted. This is what is, are the headline. Now, if you see what the reality is, if you go a little deeper, like for the NBFC sector, I have written that ALM mismatch is another big crisis. You may be reading in the press that, smaller NBFCs and the NBFCs who are not having very strong promoter are getting really squeezed on the liquidity. RBI has some time back announced a moratorium, and NBFCs have given moratorium to its customers. However, they are not getting the moratorium from the providers of the fund, which is the banks, mutual fund, insurance, and the pension funds. So this is the nothing direct related to the crisis, but this is a second order impact of the crisis when people, businesses are impacted, NBFCs are forced to give moratorium and giving them the deferral of few months to pay your EMI, but their cash flows are impacted because inflows are not coming and outflows, banks are forcing them to pay now. A couple of other, if you see, the reality is that employees are facing job loss, pay cuts are rampant now, and they don't have any visibility when the pay cuts are going to be restored. Businesses are disrupted, demand has gone down quite substantially, and as we see that uncertainty is very relevant. If you see that most of the NBFC, most of the companies who are coming and declaring the results, they are not giving any guidance of how the FY 2021 is going to look like. In fact, respected governor in the March, his statement also said that they can't comment on what the GDP is going to be in this kind of time because they don't know. And that's the real answer. Instead of guessing what is going to be, so they were upfront saying is they don't know the answer. So that is the impact, is visible, and a little bit of struggle you were able to see that. But where the opportunity lies is really at the bottom of the iceberg, where it is difficult to reach, but is the place where the opportunities lie. And I must believe that as the companies are wrestling today with the crisis management for today, they must have a separate team of maybe combination of some of the young, energetic people, at the same time seasoned and the vintage employees in the company who understand the work, who understand the market, and they need to go deep into the hidden opportunity and try to find out new sources for revenue, and so that the company is ready as and when the crisis subside and they have new levers available to succeed. Some of the good examples are, as you will see in the market, like Parle-G has come up very quickly with the Parle-G hand sanitizer. It's a very different product. Similarly, some of the companies I see that have changed their current product structure to align to the new reality. They have reduced the ticket size for the loan what they give. They have named the COVID loan, separate loans they have started. So these are the things I think a company needs to find out an opportunity. It's very simple to say we are in crisis. Okay, let's shut shop and sit at home. But the companies, for their successful future, they need to start thinking a lot more than only the crisis management. Now let's move to slide number 3. Now, how should we? Now we talk about the crisis, right? How do we need to respond to a crisis? And for any effective crisis management, I believe first step is to assess where do we stand, how much underwater we are. That's very, very, very imperative because you can't think of a solution till the time you assess it. And what is the strategy? What is the way one should adopt for finding out where one stands? It's not going to be in the people sitting in the corporate office. They are talking to each other, reading some reports and writing a statement saying, okay, where do we stand? We need to have the ear to the ground approach for the risk management. So we need to speak to our employees who are sitting in the branches. Like Fullerton is having more than 3.5 million customers. We have close to 14,000 employees. One of the first thing what we are doing is to speak to the people, get a real sense what's happening on the ground, speak to the customer, speak to the potential customer to whom we want to take them on our books, and get a feel what's happening really on the ground, because many times people sitting in the RE tower, they don't know what's happening on the ground. So the approach has to be to find out what is the real status, how coronavirus is affecting your customer in greater detail, which segments are impacted, which class of customers are impacted, so that you can create an appropriate response for that. The other thing as a CFO, which is the second bullet, identify and quantify KPIs, I firmly believe one needs to identify what are the lead indicators. Crisis is there right now, but what are the lead indicators which will help you assess and respond appropriately in the times to come? So one of the lead indicator could be that how many branches you have in the red zone and how it is going down or going up. Some of the indicators could be how the bounce rates of the customers are going up or down. So that will tell you ahead of time which direction you are moving. So CFOs needs to identify key indicators, which will be a lead indicator, which will give a fair sense on which direction company is moving, and then the company can take the appropriate steps. And this will enable the company to react fast and at the right time. Now, coming to the second element of the three-step approach, which is the response. After assessing correctly how much underwater we are, now we need to have a multi-pronged response strategy. Now, for the finance company and even for relevant for many other sectors is that for profitability, there are three levers: revenue, expense, and for finance industry specifically, cost of credit or the delinquencies or net credit loss. You can say there are three elements. In this kind of environment, revenue for sure is not in control. It is going to go down. Why? Because companies will not be distributing more money to the customer. They will like to see the impact, how it is virus is impacting the customers. So revenue is bound to be muted. Credit cost is expected to be higher than the pre-crisis. Why? Because income of the customer is impacted. He will be more stressed. He will like to conserve cash. He may not like to pay the EMI, and which may lead to some spike in the credit cost. So 2 out of 3 are not in control of organization. So what is in control is the cost. As a CFO, cost maintenance, cost optimization is one of the key priority other than the many other things. And I believe that, this is the time when we need to cut ruthlessly the bad cost. So for that, we need to be very, very careful in identifying the bad cost and then taking an action. We cannot have one size fit approach. We cannot cut the digitization cost. We cannot cut the cost which is required for the future. But yeah, these are the times, the difficult times is a good opportunity. So you need to identify the cost, what is you can cut, maybe by aggressively adopting RPA or artificial intelligence or the so and so forth. A lot of avenues available. If you incorporate that in your operations, you could save. At the same time, you need to see, some of the, it happens in the good times, some of the cost you ignore. Maybe some of the products are not making enough money, but in the good times, you continue to have them because of a variety of reasons. But in the bad times, you need to cut that so that you can use that resource for rightfully investing in the right areas. So what essentially, the company needs to do is to cost rationalization and follow the zero-based busting. And it's not going to be just give some increase over the expense last year or just cut expense over the last year. You have to go to zero-based now. Now, other than that, I will say that there are two other things on this area in the response that company needs to have, as Mr. Venkat also mentioned, the liquidity is very important. We can make money in the future, but if we don't have a liquidity, the going concern assumption can come to a big challenge. Especially for the finance company, we need to ensure that the companies are having sufficient liquidity. And for that, CFOs needs to do a stress scenario, because we don't know what's going to happen in the future. We have seen in the last 3 months, it's very difficult. Various regulatory changes have happened, which has put the liquidity calculation at stake. So you need to have various scenarios which will help you to create simulated liquidity, and you need to ensure liquidity is all the time available for survival, not for the growth. We will talk about growth when we sail through the crisis. One of the most important in the response, I believe, is to have various scenarios. Scenarios of what? As Mr. Arun mentioned, that there are going to be various scenarios. We can have a U-shaped recovery, V-shaped, L-shaped, W-shaped. We don't know. Many words are there. And really, we don't know. So what do we need to do as a CFOs? We need to ensure that we have a response plan ready for each shape of recovery. And why do we need to do now? Why? Because we need to have a clear guidance. If we are in the U-shaped recovery, how do we need to respond? If it is going to be L-shaped recovery, maybe we need to cut cost much more significantly, and maybe we need to work on many other areas. So we need to identify what kind of recovery it is going to be, and accordingly have our scenarios ready. And I firmly believe that this will not only help to mitigate the risk in the future, but also provides an opportunity to the companies to identify new revenue streams. And it will help greatly to the companies to take decisions swiftly and in these uncertain times, and will provide a competitive advantage for sure. With this, let me move to the plan section in the third bullet. And we all know that coronavirus has shaken the nature of the work to its core. And when we return back to the office after the dust settles on the virus, I'm sure that there's going to be a new normal. And leaders are spending a lot of time today on the crisis management for surviving today. So we need to spend equally number of time on the thinking about or conceiving about how the future is going to look like after we join office, after or in the new normal for the future. Now, for the planning the new normal, companies have to have, I believe, more holistic approach and the employee-centric or the human-centric approach. We cannot continue with the command and the control style, which is the erstwhile leadership style. So it has to be more human-centric as people are working from home and new generations are joining our teams. We need to have more human-centric approach and not the command and the control approach. And one of the human-centric approach which I've mentioned on the screen is the head, heart, and the hand approach. It's a very good approach which can help us to be ahead of the curve. Now, let me move to the next slide, which is the priorities for the finance leaders. There are many. If you ask me, I can state many. But what are relevant is that we need to have a focused strategy to handle this crisis. So first priority is not the growth, is not the ROE, it is going to be liquidity management. I spoke about the liquidity management earlier, will not debate and discuss more on this, but this is the critical element. Without this, companies may go into bankruptcy and have a lot of issues. So it is required that you keep a lot of liquidity with you. Second is very important is to have the digital agenda. It cannot be only on the paper and just to excite interest from the investor. It has to be all prevailing in the company. It cannot be one department sitting in the corner of the office and saying digital transformation. It has to be embedded into each and every function. Because I firmly believe if you have the digital tools with you, it may be an investment, it requires a change in the mindset, but once you adopt it, there are substantial savings going to happen. To give you an example, I've seen when the demonetization hit the country and the NBFCs, especially in the rural market, were suffering. Why? Because they were disbursing cash to the customers and the cash kind of went away from the market. That is the time people said, okay, why do we disburse cash? Let's go into different mode and have the disbursal in the non-cash mode. And most of the companies are going to non-cash mode within 6 month time. So that crisis gave an opportunity for people to move out from the cash to the non-cash. And today also I see that people who are not using the Google Pay and the various other tools which are available, they are started using that. So you need to move in the digital way in a big way. It's no more a buzzword to attract and put in the presentation attract investors. This is the need of the hour. There has to be a cautious call to adopt that in all the ways. Third is the cost optimization. As I mentioned at length earlier, this is also needs to be done. Cut the bad cost, reinvest that cost into the future, and maybe some portion should go to digital. And the fourth one, which I put it as stakeholder management. There are many stakeholders. For the NBFCs, I can say, or the financial companies, I can say there are 4 key stakeholders: rating agencies, lenders, then there are regulators, because these are regulated by the Reserve Bank of India, and there are shareholders. So we need to ensure that we need to keep all of them well engaged in the crisis, because in the crisis, first thing which comes in the minds of people is that I don't know how the company is going to perform. And if you don't inform well in advance, the obvious response is going to be that company is going to be in trouble or is in trouble. So it's very, very important for CFOs to have the scenario planning done and give confidence to the stakeholder that we are in control of the situation and we will come out stronger than before out of this crisis, to keep them with you, and they will have more confidence on the company and on the CFO. So these are the 4. If we work well on these, there are many, but 4 I have highlighted so that you can hit the dot on exact place where you want, and you can rest assured of a stronger bounce back. So we all, in summary, needs to prepare for the new normal, which is the need of the hour. And I would like to end my presentation with this. Thank you.
Thank you, Mr. Pankaj, for that insightful opening remark. Now, I have a couple of questions for both of you before we move to audience. So my question is to Mr. Krishnan Venkatacharya. You've talked about the global linkages and then where you managed, overall India as well as other markets. So if you see what's happening globally, that most of the countries have already reopened. China is the one case, and which means these are the markets are basically the petri dish for experimentation with new business strategies, which can later be applied to operation in India. And therefore, is there any learnings for your sectors from global operation? If so, then what were those basically?
Yeah, it's a good question actually. If you, as I explained earlier, probably in terms of the travel as a sector, basically, when it has taken a hit, we have gone ahead in terms of trying to push through in terms of a transformation journey of putting our people stay put right from April or probably from March 15th, sensing the downturn, and we said very clearly that our people will stay with you in terms of trying to look through where completing the linear projects in terms of the linear curve, moving ahead in terms of the digital. I think that has seen a positive response in terms of businesses bouncing back today and transforming into billability from June is what is one positive output which we have seen. And also they have valued the customer as a strategic relationship as one. Second thing is that in terms of the retail clients where we have, and most of the retail clients also were finding it difficult to these enhanced environment in terms of servicing the customers basically. So we have acted as a war room in terms of their applications and trying to be more innovative, unmindful of the risk involved in terms of whether it is because these are good brands basically where we thought that this will prove to be a long-term strategy for us. So we have worked with them and we have stood by them and still continue to stand by them. So we feel that when the markets are opening up and when the markets are moving up, I think this will pay a great way for us and the response is really good actually. And also one of the important points which we could see is that in most of the cases wherever the sector has been hit, the CIOs have started connecting with all the vendors. So the connect with the CIOs are probably, I'm not using the word probably intermediary, but I think the most of the critical vendors, the CIOs connect as enhanced in a big way so that we are able to experiment our ideas and understand his pain and trying to get back to the table to give them that, look, I will give you what is the best output with an optimized cost or probably with a zero cost in terms of looking at it as a future relationship. So yeah, it's a valid question. I think we are experiencing that and we feel that in our assessment probably is that though people talk about a second wave and things like that, which is not in our hands possibility, it can come through based on the analyst view. But I think the markets are bouncing back a bit more faster than anticipated. And I feel that it will be good for the economy.
Thank you, Mr. Venkatachari, for that. Now I will move to Mr. Pankaj. My question is to you, Mr. Malik, that, MSMEs in India, that's a major part of NBFC lending portfolio, and that's a significant portion, and we all know what's happening with that sector. And given the fact that MSME sector is highly open and then basically concerned, vulnerable to demand destruction due to the COVID-19 crisis, how do credit managers navigate through this uncertainty to differentiate between the different shades of the borrower? Because that's what basically is going to be a big concern for NBFC sector. So and how NBFC sector is creating that environment in the sense that the best are always rewarded with the best return. So how that's going to happen, Mr. Malik?
Sure, thanks. Very relevant question. Would like to state that, in the finance industry, we have separate position as a CRO who looks into this area, but I would like to jump the gun and then give some my views on this matter. See, these are unprecedented times, and MSME is a sector where everybody should be at, this is a new area which is going to grow manifold, and nobody can ignore that sector right now. And in fact, NBFCs are one of the biggest lender to that segment. Now, what's going to happen today? Till now, we were using CIBIL record. We are seeing our personal discussion to arrive at how good or understanding their business much better. Now, in this kind of crisis, we don't know. The CIBIL record are useless right now, right? Because if he was working well. He all pays his dues. But what will happen in the lockdown 5 now? 1, 2, 3, 4, 5. Maybe he is in the red zone continuously and his business is majorly disrupted. We need to wait and see, first of all, because we cannot throw good money to the bad. We need to understand, we need to go back in the drawing board, as I mentioned, that is very relevant for every company. And to see whether that MSME is majorly impacted, minorly impacted, or this is short-term disruption which is happening with him right now. And thanks to the government, and as you may have seen that they have very recently issued 3 lakh crore guarantee to the, which is 100%, 20% of the amount is going to be covered in case you lend to MSME and there are some restrictions. So government is also aware of the fact that the funding is going to freeze for that sector, and we cannot afford if we want economy to come back on its feet very quickly. So what's going to happen that we need to understand the impact, and government is supporting that area right now. And I think as we pass through the bridge, we will find out what ways we need to start giving funding to the MSME or the smaller companies.
Yeah, thanks, Mr. Malik, for that answer, and that was really good. And I do believe that that could be a critical part, and the role played by credit manager in your space is certainly going to help them. So now my last question to you, Mr. Venkatachari, before we move to the audience questions, basically, what's happening in the market. Market is basically the roiled and plummeting valuations. This is a ripe environment for merger and acquisition in the market, and a merger and acquisition can act as a tool to manage the crisis, through the divestiture, for instance, and to relocate capital for high priority needs. And in that, what the broad business sentiment on this front look like?
If you look at it, thank you for the question. I think if you look at it today, in my opinion, and also based on my research and what the reports which I've been reading in, with the pandemic continuing or probably having a ripple effect, I think mergers and acquisition is going to be the norm, or probably I'll put the word consolidation is going to be the norm, basically. But I think one has to be very, very careful, basically, in terms of what is that which they are trying to do in terms of doing this, basically, that they should try to look at it in terms of complementing their strength and adding up for example, if you look at it for a testing company like ours, basically, if you see, I think it's essential that we need to keep an eye in terms of what is that the complement strength in terms of these mergers can come on the table. But at the same time, the caveat very clearly is that most of these companies can come at an attractive valuation, can also come with a baggage very clearly, and we should not end up draining the money at this time. So it's both a good and bad in terms of draining your money out in terms of these acquisition, and not doing the right kind of study in terms of what is that which is complement. So if you look at the sentiments today, more and more, it's too early, too premature to really talk in this 2 months of pandemic, saying that this is the kind of companies which will be thrown out into the market for acquisitions. But I think for sure that the trend, if you see probably Q2 financial year of this year and moving upwards, probably there will be many such companies in terms of consolidation mode, in terms of a win-win. Probably they have the right technology, they are lacking on customers, they are lacking on capital. I think that is going to be the norm, basically, but one has to be extremely careful in picking the right choice to a reasonable extent.
I do agree with you, Mr. Venkatachari. And now I'm moving to Mr. Malik, and one last question to you before we move to the audience. That now you mentioned about the liquidity, and that's basically one big point, and that's what's happening. And many people are looking at. In fact, the NBFC sector itself are struggling with the things. So, in looking at that, what measures could NBFC take over to to tide over the asset liability mismatch which we have seen in the past few years? So what measures you think NBFC sector should take to tide over that?
So let me first state that since the IL&FS crisis got started sometime in September 2018, that has brought the weakness in the NBFC sector on the forefront, because some of the NBFCs were doing the cardinal sin of funding the long-term asset with the short-term asset. Money was easily available from the mutual fund. They were getting the money from the retail people, and that money was flowing into the NBFC. If you go back and see how the things have shaped up. And what happened after that, the crisis, LFS crisis, is that the mutual funds stopped giving the funding. If you see their composition of the NBFC lending was around 40%, it has gone down quite substantially. I don't have number, but the trend is only downward. So that was the situation and was about to improve to my mind from Jan 20 onward. CP funding for most of the companies, the higher double digit to go on to the lower single digit is the right thing to do. And companies started focusing on the keeping higher liquidity buffer for for the future stresses. And thanks a lot for that we are entering in this coronavirus now. It was not coincided with the ILFS mess. Otherwise, the situation would have been much worse for the sector. Now, what has happened that till the FY19, the mutual fund were little wary of giving funding to the sector. Now the banking sector is wary of giving funding to the NBFCs. Largely, I'm talking about smaller NBFCs. Big NBFCs, AA+, are getting the money quite easily. But the NBFCs which are having weak credentials, they don't have a strong management, they don't have a strong promoter, they are right now is really under trouble right now. Because banks are wary, they have chosen to put the money of 8,50,000 crore under the reverse repo with the RBI instead of giving this for the productive purpose to the NBFC. Reason being they are not very confident whether the money they give to NBFC is going to come back or not. So in this kind of situation, I must say that that the companies needs to ensure they follow the fourth item from my presentation, what I mentioned, engage with them more actively. Ensure that don't hide, be very upfront and share the information with them. Tell them your business model, tell them this is a long-term business model. And government is also doing a great job in terms of giving the two schemes they have released, especially for the smaller entities like the the partial credit guarantee scheme and the SLR scheme, which the government has done, and companies should take a next step to avail that money so that they can sail through this crisis.
Thank you, Mr. Malik. There's one audience questions for you, so I thought I'll check with you. So basically, the question is that, do you suggest any precaution which FMCG sector should take, to ensure the smooth operation, during this point of time?
Sorry, is this question for me, you're saying, Arun?
Yeah, so I was asking that if FMCG sectors have anything, you have some advisory for FMCG sectors from the finance perspective that will be very helpful for them.
See, unfortunately, we deal only the retail customer. We don't have any exposure, any expertise to give the corporate lending. So I will vary from giving any response on that because there is different skill set and focus is required to assess at a sector wise what steps you need to take. Since we deal in the retail financing, I can talk more on the retail, what are the things what they need to do to ensure the better funding.
So, I think there's one question for you, Mr. Venkatachari. Basically, they're asking about will the standard operating procedures for the manufacturing plants, is there the critical? What is the criticality of that? How going to change? What is your thought about that?
Absolutely, I think it's very important that the SOPs with the new norm has to change, and more so in the manufacturing areas, basically because there is going to be more of touch and touch interface over there very clearly. So it is essential that a new norm has to come through in terms of laid out standard operating procedure, which I'm sure most of the companies are working out, and it's wide open in the public in terms of what precautions people are trying to take out. And it is critical, and it is one of the most critical items which needs to be looked at. But in terms of answering the previous question, probably taking liberty, in terms of the smooth operation, I think the FMCGs really need to be very careful in terms of cost optimization, because predominantly the cost sits on idle assets and also on the idle manpower, because utilization of manpower is very essential. And with the supply chain locking coming through in a very big way, I think they have to plan for their supply chain in such a way and negotiate their terms so that their liquidity is not affected. I think these are the two things I would like to put it on place.
Yeah, Thanks, Mr. Venkatachari, for that. I think there's one question, it's very interesting question, and we just talked about. It's basically I can answer that, and it's basically talking about, in a global after COVID-19, there's basically global realignment is going to happen, and that's for sure. That's what basically talking the multiple forum. I was talking to some of the government authority last week, and that's happening for sure, which means most of the company operating out of China at this point of time are trying to protect their supply chain, and they will basically, in that context, India will have a great opportunity, in order to attract the FDI and other piece. And MSME is going to get a benefit. There are two things happening. One, since we started the Make in India program, there's a multiple layer of what you call the output is basically the indices. Many government initiatives have been taken to ensure that ease of doing business, global supply, logistic performance index, perception index about the corruption, stuff like that, improved significantly, especially in the ease of doing business. And that's basically government of India have done a lot, and they have basically started some of the focus programs to help the MSME sector in India. The moment you start getting the FDI, there's basically the government body who are working a bridge between the global counterpart as well as the MSME in India, and they are basically creating a channel when this global party, global big companies are coming and setting up a plant. The vendor around that area, and then the state body is basically trying to provide the land. Central government is working with the state. So there's many initiatives taken by the government in the last few years, and especially last few months and last few weeks, basically very critical for them. I do believe that the MSME sector is going to get a maximum benefit out of that. It is just basically we need to stay close to what's happening in the fraternity. We need to stay close with the state government initiatives, and then see how they are setting up the big area of investment in FDI, manufacturing unit, a plant, how they're basically going to do that. So it will happen a more of holistic manner. At a DNB, we are also engaged with the government authority by helping that, and we are looking forward to ensure that the MSMEs are getting more, maximum benefit out of that. And there's one more question for you, Mr. Malik, especially on the cost front. You mentioned that I think cost priority metrics, needs to be basically. Can you suggest some models or approach which one can look at while prioritizing the cost?
Okay, sure. See, this is a relevant one for, I think, all the companies, not only for the financial companies. See, I will tell you that, we were having like 0% work from home till now. And what I see that when most of the companies have varied degrees of work from home is possible. In fact, I've seen corporate staff, 50% of the staff can work from home because work has happened in the last 2 months. It's not that work has stopped. So why do we need to have a, corporate office at a fancy places with a big building? So why can't we reduce it to 50%? People will save time in commuting. We will save cost, which we can be, rightfully invested in the other areas. Second is that the travel, and again, these conferences are happening all on the Zoom or the Microsoft or the various tools are available. So again, this is we are asking a question to ourselves: why do we need to travel? We have a big amount of travel costs. Why can't we cut that and save in this time? And I think most of the companies, especially the saving the premises cost, saving the travel cost, are the easy wins. We have ourselves decided into multi-pronged approach to cut cost, something which are the easy win. These are the easy win. I need not have apply my mind on this to a great extent because these are easy win. We can see this is working fine. Why can't we continue with some bit of tweaking, some bit of more having the controls on the cyber security, on the info security? We need to invest on those, but these can work and there's a quick save. Second, I believe is the digital thing. As I mentioned, my PPT also, that there are various tools available, and everybody has adopted RPA and chatbots or the artificial intelligence. But my own belief is that this is not all pervasive. This is only in the some section we have a tick mark. Yes, we have adopted it. It's not all pervasive. If I see in my own finance department, I could very easily now identify that these are the things really helpful. Why don't I use AI in my reporting, the analysis, so that we spend more time on the productive purpose? We can reduce the number of hands which are working on this and more productive. Other than that, there are operational efficiencies. I will to name a few. The application form for any loan sometimes ranges for 25 to 30 pages. Why do I need to have 25 pages? Can I reduce it to the 2 pages? And think about that. And also, can we have the digital, the e-signature and the video KYC, which is again prevalent in the market, but many of the companies are not following it. And these are the quick, and I must say, with a 3 to 6 month time can be achieved. So one needs to have these kind of things, which are successful examples are there around you, but we are not using to the fullest extent. Maybe it was not carrying a priority, but now this is the time we need to accept this, have a cost metrics clearly identified, and within a time frame we should track and ensure that we deliver on this. This is no more an option. This is a necessity now.
Thanks, Mr. Malik, for that. And there's one question for Mr. Venkatachari on the sectors. Basically, a very simple question: what opportunity you see in the ITT sectors after the COVID-19?
I think there are a lot of there is a lot of opportunity which is going to stem up basically in the mid-tier segment, and especially I strongly feel is that the digital and transformation areas could be the areas of business basically where there's excellent opportunities coming up. And cyber security is one of the areas which we are trying to focus out. I think security in general on IT, I think more of cyber security, I think that's going to be one of the areas.
Yeah, thanks, Mr. Venkatachari, for that. And I think there's a final question. We have some time, 5 minutes before we close that. So there's one final question I think I can read for Mr. Malik, especially in the NBFC sector. So, of course, in addition to the obvious demand destruction and the low risk appetite, what are the other challenges that the sector faces? For instance, KYC requirement in the light of lockdown or etc. Basically, what is your feeling about that?
Well, as you rightly said, that one of the big challenge is the liquidity fast. I think the KYC challenge is that you're not going to meet the customer face to face. That's a temporary disruption, and I think every disruption gives you an opportunity to fine tune that. So why can't we do a video KYC? So that's the talk now, and also when we are not able to meet our customer face to face, we are not able to collect cash from him. And you will be surprised to know that when we are not able to meet customer, at the same time, customers are using various modes of giving online payment now. We thought it's very difficult to talk to rural people and get them to move to digital one. Maybe we have lots of excuses. They may not have smartphone, they may not have connectivity, but guess what? When the crisis hit, you're talking to them, and all these things are just an excuses. People are having these tools available with them. So KYC, definitely there are alternate modes of doing it. We need to meet face to face. We can still do that in alternative ways, and there are a lot of fintech players in the market who are doing that today. I think the crisis is largely on the liquidity, which is an existential challenge for the NBFCs. This is number one. And second could be, as we go along in the 6 months down the line, if the virus does not subside and it takes the second wave, there could be a capital calls coming on most of the smaller companies. And that will be another challenge. Markets are really, already 40–50% down for the sector, as you see that. And if they need capital at this time, that will come, very cheap, and it's not good for the NBFC. So one is the liquidity, second is the capital. I think these are the two clearly the big one, and there are around the other one, that how will they grow asset, and I think it will take some time before people understand how it is impacted the customer segment in granular detail. And they then need to adopt the digital ways of creating the scorecard based on the new parameter and finding out some other thing where if the people are going to default now, but maybe their credit score will get diluted. So you need to find out some surrogate to understand is really, can we put aside the credit score and look into some other elements of the business and then assess its credit worthiness. Those are the challenges I believe I will carry much more importance right now.
Thank you, Mr. Malik, and thank you, Mr. Venkatachari, for your insightful conversation and the discussion. And it was really great to hear both of you. I think we had, we are basically done with the time, so we are closing this one. And thanks for joining this one. And now I will hand over to Mr. Kaustuv for closing remark. Over to you, Kaustuv.
Thank you, Dr. Singh. I would like to again take this opportunity to thank both our speakers, Mr. Pankaj Malik and Mr. Krishnan Venkatachari. And thank you to all our participants who have joined in today. We will be sharing the presentation as well as the recording of the webinar with you shortly. And if you have any further questions for us, you can write to us at india@dnb.com. That is India, INDIA @dnb.com. Thank you so much.
Thank you.
Thank you. Thank you, Mr. Malik. Thank you.
Okay,
Mr.
thank you. Bye-bye.
Thank you.